Good evening, this is Ken Long at Tortoise Capital with a daily market review for January 27, 2016. Looking at a daily chart on the health check. In the market we have this retest of the edge of the river continues. Price was not able to follow through with the second day of momentum. Stopped at the northern edge of the dragon at the edge of the river. The dragon has now come back to the river. Still, we are below the 10% from highest high, so still deep in the bear. We're below that 200-day moving average. If we get another new low of the day tomorrow, that's a signal to go immediately short. Still looking at targets 187, 184, 181 on the downside. Slope of the 30 is still horrible. You can see the 10 and the 30 regression lines are still deeply down. The only positive sign in all this is that the percent price oscillator jaws have closed and are just nudging upwards, so that's some of that downward momentum of the previous 20 days has stabilized. However, this could be just leg one. If this fails and then we get a price below 184, the real body of this doji, then that's where another leg of that magnitude on the downside. Meanwhile, carrying no overnight risk, here's a couple series trades from this morning. The first was the morning trade, essentially looking at XIV on the long side. Once we get into the mid-morning, the opening at the blue line, the initial morning hook fail at the RL270 and then rolls over. This is an RLXD short in the direction of the primary market trend, which is down. Trade one works out pretty nice. 30-cent initial risk. This is a little over 1R. The continuation play on this one, after it rolls over, it rejects it, the northern edge of the dragon. Goes short here, fails. We get a fractional loss in trade two. That rolls over. We get another RLXD entry short. This fails for a fractional loss. Now we've got a pattern for a low, a higher low, and then an RLXD leaving the river, or RLXD leaving the dragon. So we're long in trade four. We'll get a nice exit here on an RLXD coming back through the dragon. Find support. Trade five now becomes an RLXD. This is a fractional win in five. Now we're getting closer towards the lunchtime, so we're not expecting it to run away, and if it doesn't follow through immediately, cutting those losses short or trying to scratch for fractional gains. Trade six is another RLXD re-entry. Failed to get shaken out here. Fractional win. Trade seven is one that pays off. Now, what's important to notice here is that trade seven looks just like trade six, looks just like trade five, looks just like trade four. Only in this case, in seven, off it goes. It doesn't fail, comes back, tests the dragon, gets a second leg up, RLXD exit. This is a couple R. 8 was a re-entry on the resumption. RL10 comes back through the dragon. We're long. We get a fractional win. The last trade in this sequence, now that we're going through lunch, now we see the difference or the divergence from the RL10 and the VWAP. And so now trade 9 sets up as a VWAP RLXD, so now we're playing for this move down to 1928. We end up getting that, and then we're flat before the Fed announcement. Shifting the orientation now to the Fed. This is the Fed gyrations and all that volatility, and then the signal in the afternoon was to go short. So you get this low, you get the second low. It's rejected at the edge of the northern edge of the river twice, and now a new low of the day. This is auto short territory. A quick smash down here to 1844, and that's a couple R for a quick hit in the last hour of session. So, and then carrying no risk overnight. A nice way to sleep easily during the bear. So, Ken Law from Tortoise Capital. Keep your risk measured and your powder dry.